Hello and welcome. I'm Alan Thompson, the hardest working realtor in West Volusia, and I'm joined today with my friend Ashley from Patriot Home Funding. Ashley, how are you doing today?
Good. How are you?
I'm
For having me today.
just barely able to speak, I guess, but
Yeah,
otherwise I'm doing good.
you got to
Uh,
get the coffee in already.
yeah, maybe I've had too much coffee and it's kicking in all at once. Anyway, so so you're going to talk to us today about forbearance. Is that correct?
Yes, I'm going to talk about forbearance, what it means, give you a little information that sometimes servicers aren't getting.
Perfect. Well, I guess let's start with what is forbearance?
So forbearance is whenever you pause your payments. Forbearance doesn't mean free. Forbearance doesn't mean putting at the back of your loan. It just means you're pausing for a moment, but you're going to have to pay those. And that's the problem with a lot of this is that when you log in to make your payment, due to federal regulation, these lenders and servicers have to make it readily available for you to forbear. And unless you're reading the little fine print, a lot of people don't understand what it means and how the long term effect is. And so, for example, if you didn't pay your April, May, June payment, July comes around, now you owe all those payments. And the bank wants their money. So you either owe that all in a lump sum, and if they say they'll work with you, then they make you divide that by 4 over the next 4 months. And who has the money to make 2 mortgage payments every single month? No. So then they say, okay, well, let's do modification. And when you do a modification, you're leaving everything in the bank's hands. In 2008, people were getting 9.99 interest rates. They'd also do a structured tier where, like, maybe your rate starts at 3.625 and it's an adjustable rate over so many years and maybe ends at 5.625. And a lot of times in those modifications, there's verbiage in there that you can't do a refinance for 12 months. So you're stuck with whatever terms they gave you. Plus, they charge massive fees for the modification. So now your loan amount that was once 200,000 might now be 225,000. And life changes, and people think they buy their houses and stay there for 5, 6 years, and then 2 years you feel like, oh, I'm done with this house, and you can't sell it because now you're upside down
I can't
because
tell you
one
how
for
many. Oops, go ahead.
yeah, just because that one forbearance. So go ahead, sorry.
No worries. I can't tell you how many forever homes I have resold. Like they
Yeah.
bought it as their forever home, and I'm in a position that I'm reselling it 3 or 4 or 5 years later because it something changed in life, and that's exactly true. So, what if what repercussions are there? Obviously, if they do a 3 month forbearance, um, and every situation is different, what kind of repercussions does that have, even if they're able to make those 3 months payments up? Are there repercussions there?
So if you're looking to refinance or purchase, all lenders now are making you prove that you've caught up on that forbearance because obviously they're not going to lend you money when you're not paying your current mortgage. So you have to prove that you either made a lump sum payment because the verbiage goes on your credit report under the loan. It says this loan is in forbearance. And
Okay.
so while it doesn't make your score go down for being late, when the lenders see that and you're trying to refinance or even purchase another property, it doesn't even matter if you're trying to do anything with that property. They're not going to let you proceed without proving that you've caught up on all those payments. And some people, they've applied for the forbearance. I've talked to numerous people this week that have applied for it and continued to make their payments. So, or they didn't know this.
Okay, so they can do the forbearance, continue to make their payments, but what they do need to know is that it still shows up on their credit report that that loan is in forbearance, and they're going to have to prove to another lender that the loan payments, or maybe even their current lender, if they're looking at refinancing, that those payments are actually they're actually being made. That's going to be on the burden of the customer, correct? Or client.
And the biggest struggle with forbearance is there are a lot of people that file for forbearance that can ultimately afford to catch up on those payments. But there are a lot of people that applied for forbearance and maybe they don't have all the facts because, like I said, it's not readily available. And even the media makes it sound like, oh, it's just a click of a button, don't make your payment, and they can't foreclose on you. But what happens is when that fourth month hits and they can't afford any of the options that are presented by the bank is going to take their asset back, which is your house. And you've worked so hard as a first time buyer, or even a future buyer, to get your home. And now, because of something that they didn't provide all the facts, you're losing your home now. So,
Wow, it's an incredibly scary position. I see a lot of homes that I'm dealing with now that did the mortgage modifications in during the downturn in the economy, and they have liens on the property that they didn't know about or didn't understand when they took those in. I have one customer now who they applied for the forbearance, and their home will actually sell before that payment it comes due. But they said it was such an easy process, and there was really no fine print other than, hey, go ahead and get the forbearance. If you can't make, it did say that the loan payments would be due at the end of the forbearance, but it basically said if you can't make those payments, then we can either extend the forbearance or we'll work with you. It was very vague. And
yeah,
so for a customer that's doing that, though, how would you suggest that they find out more details about what they're getting into?
I know the wait times are astronomical at the moment, but get on the phone. Call. I mean, I don't care if I have your loan or not. Call me. We'll discuss what you need to ask, the questions you need to ask, because a lot of people don't know the questions they need to ask, and every servicer is going to be slightly different on how they present this. But give me a call. Let's talk about the questions you need to ask that servicer. I'll call on three-way with you to make sure that you have the proper information. And I know that these wait times are so long to call these people right now, but it's important to know so that you can protect the roof over your head.
Well, even if it's a 15 or 20 or 45-minute wait time, the amount of stress that you're going to reduce in 3, 5, or 10 years when this catches back up, if you have to do a loan modification or that kind of thing, the amount of stress that I'm seeing some of those people go through is incredible right now. So that time that you invest now is definitely worth it. I think it's also amazing that you would volunteer, whether you've serviced their loan or not, to help them get through this, to make sure that they're getting the right information that they need to know, because it is
Knowledge is
a
power.
stressful process.
Yeah, it's very stressful. Knowledge is power. I'm not sure. We haven't seen a lot of modifications now. This will be our first upturn really since 2008. But back in 2008, people were having to go to court over these things. So not only do you have these modification charges, but then they roll their lawyer fees into it and so forth if you're forced into that modification. And then you're completely upside down on your house. And forget it, you're just staying there forever. Your forever home just really became your forever home. So
Oh my. Yes, it really is kind of scary. And because if you're able to make those payments, your forever home might be your forever home, because a short sale is not going to be an option if you can't prove to the bank that you're incapable of making those payments.
exactly. And if you have a short sale or foreclosure, you're not going to be buying a house for 3 to 7 years from that point, unless you do an alternative type loan, and then you're going to have a 10, 11, 12% interest rate, as they're more similar to a hard money loan to even purchase a house, plus having 25 to 30% down to use those type of loans. So it's just the long-term effects are not discussed, and um, people just think it's easy, and then they tell their friend how easy it was, and then their friend does it, and you just don't know what situation you're putting people in.
That's a great point. You really don't. What about being able to, are you seeing people be able to refinance instead of doing a loan modification? Would that be an option that you guys could look at?
Yeah, as long as they've made their payments and not gone into they've gone into forbearance, they just have to have caught up. So I have someone right now that I'm actually working with, and she paid her April. She just hadn't paid her May yet, and I told her go pay your May, and we'll continue with the refinance, and that's it.
Okay. And that might even be able to buy them time that they need in between, because if they're in the process of refinancing, they make that last payment. What typically is the next payment due? What's your time frame do you normally see? Is there a break in that time frame?
So, for example, if you close in June, you don't have a first payment until August 1st.
Wow. So that could actually be the forbearance portion. And with the lower interest rates, if their loan is already at even 5, 6%, like some loans are, they could have the equity and drop their payment and be able to roll that closing costs into the loan. Is that correct?
They can do that. And rate term, I mean, even if they need get a little bit of cash out of the property, that's something that we can look at too. I mean, use your equity smart. So
Yes, not buying jet skis and toys.
yeah, exactly.
Well, Ashley, if somebody is looking to do that, if they're in a position, you're a great resource to be able to go to. How do we contact you?
You can reach me on my cell phone at 407-394-9488. That's
Perfect. And you also do new home purchases and refinances if they're not in trouble. Is that correct?
exactly, yep. And I'm a mortgage broker, so I shop for you rather than being stuck with just one lender.
Perfect. I appreciate your time today. Thank you so much. This was some really valuable information.
Thank you so much. Appreciate you.
All right. Bye, guys. We'll talk next time.